So what do you trade most often, and kind of how did you find that as your best spot, as in between futures, commodities, stocks, bonds? How do you find where you trade best or where you can make the most money?
So it's a complicated question, but it's one that deserves some detail. I traded stocks and options for 15 years full-time for 3 different hedge funds, and the big thing there was there are so many stocks, there's so many opportunities to find new ideas every day. And in the stock market, you have not only individual stocks, but you have the industry that can affect them. You have the overall market that can affect every stock. And you really need to understand how a particular stock works within the industry. So it gets kind of complicated, although it's probably the one area that most people trade in the most. But it's probably the one that also gives you the least amount of time to participate, because the stock market is only open from 9:30 until 1 here in the West, or 6:30 until 1 here in the West Coast.
So what is your personal preference?
So if you were just starting, there's a couple things. Stocks are taxed just as your normal income rate would be. Okay, so if you make $1,000 and your income tax rate is a total of 35%, you're going to net $650 after you pay the government, both federal and state. On the other side, if you trade futures and you trade currencies and you trade commodities, those are really called traders markets. They're the most liquid. They pretty much trade around the clock 24/7. And in addition, there is a straightforward tax advantage for the trader. At the end of the year, when I trade commodities, my broker just gives me a 1099, tells me how much I made. And I turn that 1099 into my accountant, and I pay. It ends up being about a 20% rate. It's about a 6. It's like when you own real estate for 2 years, and that's the way the law is written. If that were to change, I might change the way I behave, but that's been that way forever. So it's an advantage to trade, for example, the S&P futures versus SPY, which is a ETF, which is an exchange-traded fund that is the same thing as it mimics the S&P 500. But the S&P futures themselves are actually when you see that the S&P was up 10 points, it is the S&P futures that drives the index price. The index itself doesn't trade, the futures drives the price. So even an ETF is a derivative. The ETF is a stock, and that is a derivative. So 2 things are happening. You're going to pay more taxes to trade essentially the same thing, and you're trading a vehicle that is a derivative of the actual. So if you can trade the actual, which is more liquid, trades 24/7, you can get in and out, except for 15 minutes from 1:15 until 1:30 here in the West Coast, and then from 2 until 2:55 it closes. Other than that hour, futures are open 24 hours a day, so 23 hours a day, whereas the stock market is only open for about 7 hours, 7.5 hours. So it's much easier to, if something happens overnight, to push out of a position or get into a position because the market continues to trade. So the tax equation, along with there's the liquidity, how often they're open and how much they trade. These are traders' vehicles. Why wouldn't you give yourself a tax break just by trading futures and commodities and currencies, which are much bigger markets than the stock market anyways, and you don't have to worry about all those other things that I mentioned in the beginning, such as the market, the industry that the stock is in, the people that are involved in it. Listen, it's a lot easier to control what's going on in oil because somebody is not going to be cooking the books when it comes to oil. Now, you do have things like OPEC and FOMC, which are interventional guards that are there to manipulate and move markets in the futures market, but we're aware of those. We know when they speak. They speak regularly. We know when those are scheduled. They don't shock the market as much as, say, an Enron, where the CEO and the CFO were colluding to fraud. So when that happens, it not only brings down Enron, but it brings down the whole industry. So when a stock gets hit, typically the whole industry gets hit, and that provides opportunities, but it also brings a lot of risk into the equation for those that aren't involved in a stock that may be bringing down the entire industry. So in the stock world, there's many more names. There's about 7,000 U.S. stocks today, and there's really about 45, 50 liquid futures. So my world has shrunk about 99% by looking at the futures. They're liquid. I don't pay as much taxes, and that's why I prefer to trade futures and commodities. And you should also. I mean, it should be really what you're looking at. If you're trying to generate income, you're trying to generate return, it's the most liquid item out there in the marketplace. It gives you the best and best tax effect as far as your portfolio is concerned. Hey, thanks again for participating here at the 5-Minute Trader. If you'd like to learn more and have an hour of time to spend with us, click the button on the website. If you'd like to spend a day with us, we have that offering also. And as always, we thank you here at the 5-Minute Trader for being involved, for wanting to learn. We're grateful for your business. And any questions that you may have, send them our way, and we'll be happy to answer all and any questions over the life cycle of the 5-Minute Trader. Peace, have a great day, and have a safe weekend.